Oh my God, could it be? This might just actually work. All right, well, all we can do is try. Appears to be live. All right, welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 9 p.m. Eastern Standard Time on January 26, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Well, it appears we are live. If anyone can hear me in the chat, let me know. Sorry for the technical difficulties. This has been a week plagued with one event after another, it appears. We've had constant crashing of the browser and inability to operate TradingView. Discord going down, and a series of other events as well. But, alas, here we are. So, gonna go ahead and just try and proceed as usual. And hope that it was meant to be. So, all right, let's take a look. So, obviously, we had our Fed meeting today. Quite an important one, to say the least. Nothing unexpected happened. Jerome Powell did exactly what we expected, right in line with what he told us he was going to do. Many people were surprised by this, but in my opinion, he did an extremely good job orchestrating exactly what he would do, continue to do nothing, or should I say continue down the same path. So, needless to say, the market stumped, rallied a little bit, tried to pump in anticipation of what they thought Powell was going to do. The markets were obviously wrong, and now here we are, lower than where we started. This was, of course, no surprise to me, as he literally did exactly what we expected. So let's just take a look, jump right into the technicals, and hopefully we will have no more issues. Hopefully. So taking a look at the TNX. We see here on the daily, we are basically at all-time highs or at cycle highs, retesting the top of the range. So we have broken out recently to a new high at 1.8, about 1.85, 1.86. Had a slight pullback over the last couple days, and now here we are right back at the highs again. Obviously, if you did not catch the Fed meeting today and the questions that ensued afterwards, Powell essentially said that they would continue to taper their asset purchases, treasuries and mortgage-backed securities. The taper would be completed by March, as they previously announced, at which point in time they would consider rate hikes, and they would possibly start decreasing the size of their balance sheet. I'm not sure if they're going to actually sell anything off of their balance sheet, or if they're just going to essentially not add new things and just let the old stuff run off. I imagine that's probably what they would do, because they're not going to try to create excess selling pressure into the markets. So we will see, but obviously this is a hawkish tone. But we all know that the majority of the Fed's power comes from the credible threat. Not so much that they actually do anything, but that they can convince the market that they're going to do something, and then the market reacts in anticipation of the move that they announce, which is why they try to be so clear about it and why Powell goes out and answers all these questions, hoping that people will listen to what he says and then the market will react accordingly without him ever actually having to show his hand. So think about it as a poker game, and Powell goes all in with his chips and says, I hope you can beat a straight flush. And then everyone at the table has to decide, are they willing to risk it all to see if he actually has a straight flush, or are they just going to fold? So here we have the Treasury yields at key levels, at previous all-time highs, and yet the Fed funds rate has not moved. So it looks like the market is moving in anticipation. So if we're not expecting an actual hike until March, could we have another 2 months of the 10-year Treasury moving up, or of Treasury yields in general moving up in anticipation of the actual hike? Well, I would say possibly, probably. We'll have to see. But in the meantime, it looks like that's the way the market is acting or reacting. But I do expect continuation to the upside. The next key resistance level being somewhere around that 2.0 level. We obviously had a massive cup and handle pattern, descending channel that broke out, forming the handle. The resistance here in blue, the breakout of the resistance likely to give us our measured move. The initial move being back up to the 786 of the macro Fibonacci level at 2.0. The completed measure move in green here, all the way back up close to like that 2.6 to 2.9 level. At which point in time, we would be running into our macro resistance for the entire trend that essentially is lasting, 40 years. So we've been operating inside this channel for basically 40 years, and we're potentially getting ready to threaten the top of the channel once again. So the likelihood of a breakout of the actual channel above, let's say 3.0, is not very likely, as we've not been able to break out of the channel for 40 years. But the likelihood of retesting the top of the channel now that we've broken through our macro resistance and key fib levels seems highly likely to me. So let's continue on. Take a look at our VIX next. So here we see on the VIX, we are getting some key moves taking place. We obviously have our descending channel right here inside of our macro horizontal channel. We know that the key levels we were watching were in between the two heart lines of the channel, broke out to the top of the range, immediately broke out of the channel in the last couple of days leading up to the Fed meeting. Got the close outside of the channel, paying attention to see if something like this happened, a false breakout or failed breakout. But in fact, we got the strong move to the upside corresponding with the dump in the stock market, which was actually our measured move playing out, at which point in time that did not stick. Got bought straight back up. We saw like over 1,000-point move to the downside in the Dow, followed by a rally back up to essentially where it opened to close positive for the day. One of the most volatile and biggest swings in all of stock market history. But we did in fact get the measure move. The rejection essentially looked like a shooting star candle rejection, followed by an indecision candle, push back down, retesting support, and then we push back up again today. So at this point in time, we have to determine, is this going to be a sticky breakout? Can we expect this continuation to the upside? Now that we've broken this range, we've already hit our measured move. So arguably, it's done. But we're paying attention to now as we took out this previous high. So now we have a potential trend reversal in play. We had a high a low, a lower high, lower low, lower high, lower low, lower high, lower low, just series throughout this entire range. But now we've broken out to the upside. And now, if we pay attention here, we essentially have a double bottom, followed by a higher high, followed by a higher low, higher highs. So now, the real question is, are we reversing this trend now? Are we going to see continuation to the upside? Well, I mean, we don't know for sure, but it seems much more likely now than it has so far. So if we just begin to pay attention to something like this, and then essentially look at these key levels and see if we continue to violate them, it looks to me like we have broken the descending channel and started to create an ascending channel. So we could top out right here, come back down. The most important thing is that we find support at a higher level than we previously did. So as long as we now put in a third higher low here, the same way that we put in a third higher high here, this will still look bullish. So is it possible we see a couple-day rally in the markets, the VIX normalizes, and then we see continuation? It's 100% a possibility. And I think that is the most likely scenario. However, because we've been in this range now, I mean, this is over 2 year. This was the CVD dump in March of 2020. So, we basically have been in this descending channel, in this range, for 2 years. We had a little false breakout right here, but now we've essentially confirmed this breakout and, started trending back to the upside. So the likelihood that we now could see continuation, or at least increased volatility in these markets, seems extremely likely to me. So the initial breakout, might have alarmed some people, but the most important thing is, yeah, we broke out, but it wasn't sticky. And then when we came down, we put in a higher low. So now when we break out again, people are going to be thinking the same thing. Well, it's not going to be sticky this time, is it? So now the doubt is really in people's minds. So when we come down here now, I would expect a rally, or I should say support, somewhere around this range. Is it going to take a couple days to get there? Is it a violent move? Is it just a kind of meltdown? Do we just see some kind of sideways action as the market is unsure how to interpret, current price action, etc.? All viable options. I think the most important thing for us to pay attention to, though, is not how we get there or what it looks like, but what happens when we bottom out right here. Is it a higher low? Do we find support on the breakout level? Because that likely will lead to continuation. And we know, historically speaking, looking at the VIX, we know this is the volatility of the S&P. Every single time we enter into this red area, it corresponds with like a macro market top. So we know that we can switch to a longer time frame. There we go. So we know here, this is 2000. So that was obviously 98, I'm sorry, right here. These are obviously corresponding with like macro market tops. So we have 98, we have 2001 and 2 right here. We have this massive one right here in 2008, 2009. We have 2014, basically 2015. We have 2017. We have the CVD top right here. The same way that we have this corresponding with, macro lows. So if we break out right here, this is likely telling us there's a massive dump taking place. Now, volatility does not have to mean specifically upside or downside. But typically, because the stock market is designed to essentially go up, we would expect that when this volatility starts breaking out to the upside, it's probably corresponding with a move in stock prices to the downside. So let's move over to the Dow Jones now. So we're obviously seeing some key things taking place. Now, we've been watching a few things on the weekly chart for some time now. So none of this is a surprise by any means. It's just corresponding with actual real life events now that are looking like the catalyst or the trigger or the reason this is happening. But the truth is, we've been seeing this on the charts getting ready to play out. It's just a matter of timing. It's not a matter of if, it's a matter of when. So here we have the daily Dow Jones. Again, this was our dump from CVD. Since then, we've been in just this full-on melt-up. We broke out to the upside, past our long-term resistance line. We found support on it multiple occasions. Once, twice, a third time. But now, each time putting in a higher high, we broke down from that level. And when we broke down from that level this time, we came back up, retested it. And this was today's candle. We could not reclaim that level. So now we're back inside of that range. And then on top of that, we have our green horizontal resistance turn support. We couldn't break through it. Finally broke through it, couldn't hold it. Broke through it again, couldn't hold it. Broke through it, held right here. Put in a new all-time high. And now here we have broken back down. So what should have acted as support is failing to do so. And then on top of that, if we turn off our drawing tool and we just look at our price action, what are we seeing right here? Well, we're seeing that when we flip this over after the CVD dump, we flipped the 200 exponential and the 200 simple blue, and then we have been in a straight on melt up to the upside. We then saw this happen right here in September last year, 2021. The 200 simple crossed above the 200 exponential. So we see this was showing weakness in the markets. So while we continue to put in new all-time highs, we see very clear weakness as the 200 simple passed above the 200 exponential, telling us the market's not likely going to just top out immediately, but we are very close to the top. So we will often continue to see all-time highs put in, but we are losing momentum. And that's why I like to use the 200 exponential and simple. Not only to see what everyone is seeing, because some people are using exponential, some people are using simple, depending on traditional markets, cryptos, how volatile the asset you're looking at is, etc. But we know that a large portion of people doing technical analysis, people watching momentum, people looking for, the mean or reversion to the mean play, are going to be using one of those two. So when we see the cross taking place, we know that the market is potentially shifting. So when we come down here, let's say, for instance, you were just using the 200 simple, it would look like we violated that range and then bounced. That might take you out of your position. But in all actuality, if you're using the 200 exponential, we came down exactly to support and then bounced. And then same thing here. We came down to the 200 simple, found support and bounced. So if you were waiting for a buy opportunity on 200 exponential, you might have missed it. If you were only using the 200 simple here, it might have got violated and you might have got scared out of your position. So in my opinion, it's exponentially valuable to use both of them. But now here we see the 200 simple is above the 200 exponential. We broke down below it. We could not get back above the 200 exponential. So while people are already calling this, a breakdown and failure to hold support, we're actually seeing that the 200 exponential is acting as resistance. So when we pushed up today, we could not get above the 200 exponential. Again, we didn't even get back to the 200 simple. So some people were expecting this to come back up here and then potentially get rejected and roll over. But in all actuality, the move they were expecting happened. It just happened on the 200 exponential, not the 200 simple. Is it possible it still moves back up here, gets rejected, and then goes down, or reclaims it and goes to the upside? Sure, anything is possible. But the key is, for the first time in this entire trend, we are now seeing we had both the 200 exponential and simple to the upside with a positive slope. And now here we have lost the slope on the 200 exponential. We have lost the slope. We have beginning to potentially enter into a bear market on the Dow Jones. The 200 simple has almost a flat slope at this point in time. So literally just 1 or 2 days below 35,000. And this will probably roll over. And we will have confirmed a bear market the same way that here, when we rolled over the 200 simple and 200 exponential, coming out of the CVD dump, we confirmed a bull market. So we're seeing a legitimate change in trend taking place. If we switch over to the weekly, we see we have a series of bearish divergence taking place. One drive, one high here, a second drive, second high here, a third drive, third high here, and a fourth drive, fourth high here of bearish divergence. Depending on how you look at this on the weekly, you could argue that this maybe is bearish divergence or that these 2 points correspond as a single point. But regardless, we have at least 3 drives of bearish divergence taking place on the weekly, corresponding to our hard sell signals and exit of the bullish control zone each time, followed by an attempt to push back up. And that's why these settings I use are so important. We push back up, we fail to get back above the pink Stoch right here. And then the blue Stoch gets rejected and pulls down, and that corresponds with our double top on the Dow Jones. And now here we see we have red slope line, we have lost momentum. This all took place while putting in a series of new all-time highs. So here we actually rolled over and lost the blue slope line. And then we put in 2 new all-time highs since then. 2 new peaks right here. But now we've broken down from those key levels. We broke down from that support. We have essentially a double top, an M pattern, whatever you want to call it. So, the next rational thing would be to take the measure move from the top to the bottom of the breakout range. And now that we've broken down from that key support level, the measure move was essentially what already took place. That quick little push to the downside. But now we've lost that support level. So now we need to zoom out and look at the big picture and see, okay, what's likely to happen next? And as we zoom out, we see we have this giant giant megaphone pattern where we basically have a series of higher highs and higher lows. So here we have a high, and then we have a double top, and then a lower low from this initial point. Then we have a new high, then we have a new low. Then we have a new high up here. So what we need to pay attention to now is, are we going to see a massive crash and potentially new low play out in this megaphone pattern? Or are we going to break this pattern and put in a higher low and then continue to the upside or chop around sideways or whatever? We don't know for sure. What we do know is, though, we do know we had a high here in 2018. And since then, we put in a higher high followed by another higher high. And we know we have a low here in 2018. And since then, we put in a low and we put in another lower low. So it would stand to reason that if the market continues to behave in the way that it's behaving, that the next thing that's going to take place is that we put in a lower low. Does it need to happen? No. Is it likely to happen? No. But this was also very unlikely to happen as well. Matter of fact, what was this called? This was a black swan event. This was a once-in-a-lifetime scenario. This was unheard of. It was unexpected. It was, blah, blah, blah. But the charts were already telling us that was likely to happen. So if the charts are telling us it's likely to happen again, we need to pay attention to that and keep it as a legitimate possibility. Do I think the Dow Jones is going to go to 17,000? Maybe. Is it likely? I would give it a low percentage chance. But I think it's going to try. I wouldn't be surprised. So when we see all these things lining up like this, it's at least worth paying attention to. But there's levels that are way more important along the way. Like, for instance, the 200 exponential and simple on the weekly. So if we look right here and see where those will be coming in, we can basically extrapolate these out into the future and assume that somewhere around this area, if we just basically were to, get creative and just say, okay, chances are these will just kind of continue on like this, something along those lines. By the time we get over to this area around that 30,000 level, we will probably be intersecting with those. And when is that likely to take place? Well, probably somewhere around, according to this, April, late April, early May. So do we just kind of chop around here for a little bit, have a sell-off over the next couple months while, the market tries to digest what's taking place with the Fed? I mean, I think that's a reasonable assumption. And then we have our previous stop right here from the CVD dump. And where does that line up? Well, just so happens that's right around 30,000. So we have essentially this not very reliable line right here. But we have this very high likelihood that we would come back down and touch the breakout level. We have our 200 exponential and simple moving averages. We have momentum to the downside. We've broken back inside of the range of the ascended broadening wedge. And I think that there's a high likelihood that eventually, sometime around then, we come back down and we touch these levels. Now, what happens once we get there, we'll have to wait and see, but I think that's a potential viable target. Now, that's about 12% from where we're at right now. What's that going to look like? What's that going to feel like to the market if we have another 13% to the downside? The total from, peak to trough pullback, about 20%. Well, it's probably going to look scary if you weren't expecting it. But we're also extremely overextended. And then when we look back at the macro view, Dow Jones on the monthly over, the last 100 years, we see that leading up to the Great Depression, we had essentially an ascending channel, breakout to the upside, parabolic, capitulation, breakout of the bottom of the pattern. From that point on, we started to form another ascending channel. We have 2 touch points on the top. We have 3 touch points on the bottom. The top next valid touch point being in 99. So this was our top in 1929. Obviously, Great Depression. This was our top in 2099, 100 years later. I'm sorry, 1999. This is 1899. This is 1999. No, this is 1829. Oh my gosh. You guys know what I mean. This is 1929. This is 1999. And now here we are. Essentially the CVD top right around in here. This is our current price action. So in the grand scheme of things, we're basically still at the top of the range. Everything's fine. The trend is still intact. But we're at the top of the range. And the previous times, the 1, 2, 3 times, this is our 3rd time at the top of that range. It's not unrealistic to think that if this ends up being a macro top, that we could get a massive move to the downside. If this ends up being our macro top right here, we could at least see a reversion to the 200 exponential and simple moving average, or at least the heart line here in yellow. So again, on the monthly, if we look at this, is it possible that we get a pullback to, this green area of support at 23,000? Is it possible we see, somewhere closer down in here to like more of a sideways kind of chop? Do we get a big aggressive candle? Who knows? We'll have to wait and see, but it's not unrealistic to think that something like that could be in the cards if we see continuation, if the Fed loses control, if the market decides that it's no longer safe. And obviously this corresponding to the hard sell signal coming out of potentially the bullish control zone at all-time highs with record levels of uncertainty, not only in the markets, but in, geopolitically. There's a lot of risk right now. We're at all-time highs. We've been in a long trending period of easy money. One could say free money. There's supply chain breakdowns, record levels of inflation that we have not seen in 40 years. And then, arguably, we're on the precipice of World War III on multiple fronts. Maybe it's not that serious. Maybe people are blowing it out of, proportion a little bit. But let's look at, war-wise, what has happened recently? Well, we had a, multi-decade situation going on in the Middle East. Pulled out of Afghanistan, the United States, left behind our allies, not only just the Afghan people and army, whose back we were supposed to have, but, and I'm not saying that that was a good or bad decision to leave Afghanistan. I don't think that the United States should be the world police, but that is the role that we're in, regardless. whether it was given to us or whether we assumed it on our own, whether we're part of the problem or part of the solution, none of that matters. The facts are all that matters. And the facts are that we effed over our allies when we left Afghanistan. Not just the Afghanis, though, but, also other countries that had, military presence as well. So now you could say that maybe some of those allies might not trust us, might not have the same level of confidence in our military or in our politicians, our leadership. And that's what our allies are thinking. So I like to think that they're the most optimistic. So what does that mean for, I don't want to say our enemies, but, our potential adversaries, let's say? For instance, China and Russia, two nuclear powers, both, potentially getting ready to engage in, one could argue, world war potential antics. If Russia decides to invade Ukraine, technically nobody is obligated to help. But, who knows what's going to happen? Is the U.S. going to do something about it? Is the U.S. aiding and abetting Ukraine? Are we violating, our position here? If Russia invades Ukraine, is that a violation of, human rights or whatever? Who knows? There's no clear-cut line in the sand. And the same situation basically going on with China. Is China has been threatening Taiwan for months. Flybys with their military, potentially getting ready to pull a Hong Kong scenario where they're essentially going to take back what's theirs. And obviously the situation with Hong Kong was supposed to be a peaceful one and was done under the guise of, whatever you want to call it, freedom, truce, agreement. China violated the agreement after it took place, and then obviously, immediately the Communist Party took over. But at that point in time, it's too late. So are they going to do the same thing with Taiwan? Are they going to go take it by force? Are we going to end up in a World War III scenario? Who knows? But I know that there are legitimate risks. I can't think of another time when there was a legitimate risk of, a World War type scenario recently. So I think it's worth paying attention to and considering that the geopolitical risks right now are at all-time highs. The tensions around the world are at all-time highs. The distrust, disapproval of citizens with their governments and their decisions, all-time highs. Stock markets, all-time highs. Monetary and fiscal ease of money, all-time highs. So, worth paying attention to. So if we look at the S&P next, here we see SPY doing the same thing. Breaking down from key levels at the top of the range, violating the 200 exponential and simple moving average. 200 exponential has already rolled over. We got rejected when we attempted to push back up to reclaim those levels. Breaking down from key areas. Next potential targets like 390 to 370. If we switch out to the weekly chart, we see multiple drives of bearish divergence. One drive, two drives, three drives on both indicator oscillators, followed by a breakdown. Rejection, failure to reclaim the red slope line. Loss of key levels, 8 and 21, preparing to cross to the downside on the weekly. For the first time since CVD, when the 821 crossed to the upside right here, that was on May of 2020. And now we're about to get the cross to the downside. Something that we have not seen happen in that 2-year period. So here the trend was confirmed to the upside. And now here the trend is confirming to the downside. Is it possible that we rally back up above 453 or, 4,500? and save the trend and we don't cross the downside, sure, we got 2 days to do it. So if that doesn't happen, it's going to sure look bad to me. And then here we are at support on the weekly. If we close the weekly candle below this, that's going to be taking out our previous level of support and again confirming a downtrend. So I mean, this is what trend reversals look like, and this is where everyone loses all their money because they can't recognize when a trend changes. We're 12.3% down from the all-time highs. If we break down and retest our 200 exponential or simple moving average, that's 26%. You know, that's a devastating move down for most people, something that the majority of the markets have not seen, or much of the markets, I should say, have not seen, as we have record number, millions of people entering into stock trading, investing, whatever you want to call it, for the first time. The Fed has made it clear, too. They don't give a shit about the stock market right now. They don't care about maximum employment because we already reached it. So what does the Fed care about right now? They care about one thing and one thing only, right? According to them, price stability, right? So what is that? Inflation. So why was I right about what happened today? Why was it so easy to determine what the Fed was going to do today? Because they told us. The Fed told us. And you know what else they told us? They told us for the last, multi-decades that they've been trying to get inflation of average at least 2%. So everybody was like, oh, inflation's out of control. It's at 6%. It's at 7%. Shadow stats. It's at 15%. It's at 1,000%. Oh, hyperinflation. Oh my God, the whole world's crashing out around us. And then people were surprised that the Fed did not jump in and do whatever it took to get rid of the inflation. The thing that they've been saying they wanted for the last 20 years. And now they have it and they're not rushing in as quickly as possible to stop the thing that they've been trying to get for 20 years. Imagine getting married, and, things are fun. You're young, you're in love, everything's great, having all kinds of bedtime happiness, and then you get married and start to get complacent, some of the action's gone. You're not, feeling each other the same way you used to back in the day. And, every year you're just asking and wishing for a little BJ. 20 years go by, you just can't ever get one. She's not in the mood, or it's just not her thing. And then finally, one day on your birthday, you finally get the thing that you've been asking for, the thing you've been wanting for the last 20 years. Are you just going to immediately stop it? Or are you just going to kind of sit back and enjoy the ride for a little bit? I mean, I don't know. I can't speak for everyone, but I think Jay Powell and the Fed is just relaxing right now with their eyes closed, enjoying their 2% BJ. I mean, or 6% or 12% or whatever. That's what it seems like to me. So you're like, oh man, we're going to stop this inflation. Oh, it's so terrible. Oh man, we feel bad for everybody. I don't know. That's how I look at it. Maybe that's not the best, analogy. Maybe that's not going to hit home with everybody, but seems to me like Jay Powell is just enjoying a good old inflation BJ right now. So I don't know. I mean, is he going to get his nut, or is he going to eventually do something about it? I don't know. Only time will tell, but I have a feeling he's probably going to enjoy it for a little while longer. Probably at least till March, if I had to guess. I mean, at which point in time, who knows? Maybe at that point in time, he'll change. But for right now, I think he's just sitting back, enjoying a little filet. But anyway, S&P on the monthly, hard sell signal, leaving the bullish control zone. We know the last time that happened was the CVD dump. We know the time before that happened, that was our peak in 2018. We know the time before that happened here, we didn't actually leave the bullish control zone until 2015. We know the time before that, when we got the hard sell signal, that was in 2011. We know the time before that, when we got the hard sell signal, that was in 2008. So each time we got that hard sell signal and left the bullish control zone was a macro market peak of varying degrees. So here, when we've gone absolutely parabolic, a way that we have not seen since the dot-com bubble burst right here, At which point in time you saw, basically the tech bubble pop and, tech stocks lose like 90+% of their value, including Amazon, the sweetheart of tech. And here we're like massively extended on the monthly, more than we've ever been from the 200 exponential and simple moving averages. Went absolutely parabolic during the easiest financial, monetary, fiscal periods of all time. Got to be real careful right here, because if we see a reversion of the mean, we're talking about the S&P getting cut in half. NASDAQ. So we were looking at this situation as potentially being a neckline and looking for the retest of the neckline and then potentially coming back up to retest for a right shoulder and then this being a head and shoulders. And what did I say? Does it have to play out? No. We could easily bounce here and come back up. We could easily break straight through here, but obviously what happened? Well, we broke through here, came back up, retested as resistance, and now look at the NASDAQ. We have confirmed a bear market already on this thing. The 200 exponential and simple have flipped over bearish already, which is not surprising considering there's a couple names even holding up this index at all, but we're already down 19%. So we're 1% away from, Wall Street confirming a bear market. I mean, people are, oh, buy the dip. Oh, Jay Powell has to save us. Oh, the Fed won't let the markets crash. Oh, the politicians won't get reelected. Are you sure? Are you sure? I mean, Biden is basically begging Powell to just sit back and enjoy the situation right now. He's begging Powell to crash the stock market, to stop the inflation. And Powell's just sitting there trying to get his nut real quick. He's like, yeah, I'm right about to. I just want to lay out a clear plan. We'll see. I mean, NASDAQ, all these indexes are below their 200 moving average. Half of them are confirming. We haven't looked at the Russell yet. Russell's already in a bear market. NASDAQ's in a bear market. Dow Jones is very close to a bear market. S&P is very close to a bear market. We see multiple drives of weekly bearish divergence on all these major indexes. And the stock market in the United States is the strongest market. So if the strongest market is weak, I mean, we can look at emerging markets. We can look at, European markets, Asian markets, whatever, and they all look worse. So if this is the best market and it looks like shit, and the stock market is essentially, supposed to be a measure of the economy, got to be real careful here. Real careful. So, I mean, a weekly retest of a 200 exponential and simple on the NASDAQ, we're talking about 11,000. We shall see. Don't have to get there, but it sure looks likely. So here's our Russell. Trading sideways inside this range forever. The worst index. Total trash. Breakout to the upside, failed breakout, throw over, distribution taking place, Wyckoff distribution, as predicted, as expected. I know everybody knows about Wyckoff distribution, and everybody's talking about Wyckoff patterns, and everybody knows about, all this stuff all of a sudden. Oh, Elliott wave, 5-wave structure, expanded flats, Wyckoff distribution. All right. Okay, guys. There's 2 analysts left in the entire world, and then there's a million people with Twitter and social media copying the 2 analysts. Like, you just have to be able to figure out who the frauds are and who the real ones are. And I'm going to give you a secret. I'm going to tell you a secret that people don't know, okay? The only people that know what they're talking about are the ones that lay out the scenario ahead of time. The other people, in the words of Joe Biden, they're all frauds. Okay, that was my creepy whisper impression. So be careful, because all the frauds are going to get exposed. But by then, you'll have lost all your money if you're listening to them. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. You could lose all your money. It doesn't matter, because most of these people are making money off of you listening or doing or using a link or buying into a program or something like that. So they don't really care. They're going to make money regardless. It's like Cathie Wood, okay? Everybody's like, oh, Cathie Wood, she's so stupid. She's terrible. Or she's the smartest person. Sure, Cathie Wood, generated a bunch of hype for herself and lost billions of dollars for people that invested in the ARK funds. Sure. But she also made hundreds of millions of dollars or arguably billions of dollars in, management fees. So sure, she lost everybody else's billions, but she might have made herself a little billion or a couple hundred million. So is she a dumbass for losing everyone's money? Or is she a genius for taking a portion of everybody's money that she lost? One would argue that she's actually smart as hell because she just got super rich off of a bunch of dumbass people trusting her. She says she's an analyst. She says she's a trader, an active manager. Well, I mean, sure, maybe she's the worst analyst, but you know what she is? A great salesperson. Because she did nothing. She underperformed the market for the last 30 plus years. No one knew who she was or cared. And now here she is, all over CNBC, all over every possible news outlet, network, finance channel, whatever. Her name is on everybody's mouth. Queen Kathy, oh, we love you, oh. So what did she do? She got lucky in the market by betting heavy on Tesla and Bitcoin. Or maybe she's just super smart and she just went all in on a single company and she's just a genius. But it happened one time in 30 years. She got lucky or made a smart decision one time in 30 years. Every other year she drastically underperformed the market, and then she capitalized on that. So is she the best analyst? No. Is she the worst analyst? No. Is she smart as hell because she marketed herself and sold herself and, essentially scammed the population because she got people to invest in her funds? I would say yes. So here we have the Russell breaking down from this range. We have the measure move. Oh, look, measure move hit. And what did we tag on the way down? The 236. And what is the 236 from the low to the high? That's confirmation that the Russell has topped out. It's also obviously entered into a bear market, had a 23.6% retracement of the move from the low to the high. So next target to the downside would, rationally be the 382. Do we push back up and retest the breakdown level? Probably. Maybe. Depending how strong the market is. This is our weakest. So the move back to the upside would likely be the weakest move. Percentage-wise, from the top to where we're at right now, we're already down 20%. The Russell is, according to Wall Street, 20% move to the downside, bear market. Obviously we were way ahead of the game because the Russell went sideways for so long. We knew at 22,000 it was already in a bear market because we lost to 200 and exponential and simple moving average slopes. Looks like total trash. Looks like crap. You don't have to be a genius to say, blue line buy. Whoa, Russell at 1544. Yay. You don't have to be a genius to say, red line bad. Russell bear market, 2200. No. And that's what this is all about. Is to be able to just flip between a bunch of different things, not have to say, well, I mean, sure, technically the slope has changed, but, emerging markets, but small cap stocks, technically they tend to overperform at the end of cycles or the beginning of cycles or, with rates low. I think that no, take all that bullshit out of it. And we don't even have to look at math. We can literally just look at color. And we say, 2 blue, good, bullish. Red and pink, bad, bearish. And that's what this indicator is all about. That's why it's the best indicator. So to me, doesn't look good. Stock market, major indexes, doesn't look good. 10-year yields breaking out, cycle high. VIX breaking out. I don't know, guys. Let me jump over and chat. I see a couple of you guys actually showed up over here. Good to see you all. Sorry about the technical difficulties, man. Sorry about last week's stream. That was the first stream we missed in, I think, almost 8 months. I don't know what was going on. There was some kind of update put through by either TradingView or, I'm assuming it was TradingView. There was all kinds of difficulties. Could have been the browser. I don't know. I tried everything, and it was just continually crashing. So could not do a stream. And then, of course, today, Discord crashed for multiple hours during the Fed funds, during the Fed meeting. That was random, I'm sure. Maybe it was just from a ton of people overloading the servers because everybody was on Wall Street bets trying to figure out why all their trash bag stocks were going to zero, or cryptos or whatever. I have no idea. But regardless, that was down. So we're having a bunch of just random technical difficulties. And then I could not get... Oh, I was an hour late today because of technical difficulties again. So, I mean, we'll see. Hopefully this was just a fluke week. But, God, it's been a pain in the ass. So, but we're here now. We made it. Asatos says, hey, man, killed it last week. Everything played out as predicted. Damn straight it did, man. Looks like we just got lucky again. Crypto Galt says, hey, bro, just joining. Good to see you, my man. He also said, not bots. 0 likes. Oh, 6 likes, 0 bots. I got you. 7, 6. 420 says, capitulation. Haha, love it. Oh, we got a bot. Get your ass out of here. Little punk ass bot. Hey, there's a bot. Here's a bot. There's a bot. Everywhere's a bot. 420 also says, but when I turns around, it gets interesting. But when it turns around, I'm assuming you're saying? Sure. When it turns around, it could get interesting and be the buying opportunity of a lifetime. The real question is, though, is that going to be tomorrow, or is it going to be a decade from now, or somewhere in between? What's going on? What is that? Al CH? Hello to you, my friend. He said, let's talk Bitcoin. Where's Lambo? Al, if you didn't get a Lambo yet, this bull run, I'm not to be a dick, but probably not going to be getting one, dude. I mean, if this wasn't enough of a move to get you said Lambo, you're in trouble, dude. Because crypto went parabolic. And it's not looking great from here. Honkiness says, hey, guy. Crypto Galt, all good. We missed your shocked face as a YouTube teaser, though. Honkiness says, tempted to buy Quid, QID. And 420 with the you know. All right, let's keep on moving here. But yeah, good to see you guys. Good that we are live and things are actually working. Hopefully this was just a fluke week because this shit was pissing me off. I mean, honestly, I was pissed off last week that basically I load, you guys know I run like 4,000 different windows at the same time, or like tabs at the same time. And I'd literally have to go through and manually set up each tab every single time. And I literally would get through to like, I don't even know, like 25 or 30th tab or something like that, set up and ready to go. And then all of a sudden it would crash and they would all just go blank. And I would get like an error message. And I did that probably like 3 or 4 times. And it just did it over and over again. And that's when I was like, all right, well, obviously something's wrong here. So that's why we didn't have our stream last week, unfortunately. And then today in Discord, during the Fed meeting, Discord crashed and was down for, I don't even know, probably an hour or 2. Not just our Discord, all Discords. Oh, yeah, definitely, man. Glad to do these videos every week, twice a week, every Sunday and Wednesday, typically from 8 p.m. till 11 p.m. or somewhere around there, possibly 9 till 12, possibly 8 till 10, possibly not at all now is a factor. I mean, once every 8 months, we know. I don't know. Maybe it's the beginning of a trend. Maybe we just broke out of our 8-month trend of videos twice a week. And now we're not going to be getting videos twice a week. I don't know. We'll have to wait and see where the trend goes from here. Possibly it was a breakout, but, we'll reclaim our support and then continue to stream twice a week consistently. I don't know. I can't. We'll have to see. We can do some technical analysis on the likelihood of 2 live streams a week into the future. But once does not make a trend. So let us hope that that was a fluke incident. All right, so looking at the DXY on the daily, very clearly in a bull market. Just a quick rant. If I showed people this chart right here, and it said Bitcoin, or it said S&P, or it said any other random ticker that people liked, they would be running around with hard-ons about how we just flipped the trend to the upside and we're going into a bull market and we're going to come up here and we're going to threaten the highs, and this is parabolic and this is the opportunity of a lifetime. But because it's the DXY, it's not bullish because it doesn't fit their narrative. Because nobody wants to believe that the dollar is strengthening because we're printing too many, bro. Because we're devaluing our currency, bro. Take your bias away. Don't look at the ticker and just look at the chart and tell me on any time frame how this is not the most bullish chart. So obviously 200 exponential and simple have flipped to the upside, beginning of an uptrend since way back here, since the bullish divergence at the bottom, since we flipped to 200 exponential and simple to the upside and the blue slope lines, and now we're seeing continuation on a parabolic uptrend the same way that when we broke down in May of 2020, this entered into a bear market. Momentum in our favor, everything bullish on the daily. Let's look at the weekly. And again, let's just pretend for 1 minute that this isn't the DXY. Let's just pretend that this is, whatever your favorite tendies are, all right? Let's just pretend this is fucking XRP, okay? If the XRP chart looked like this, and the cult, we're breaking out, guys. This is it. This is the big one. Finally, we're going to get our tendies. Fuck the SEC. XRP. We're back on top of 200 exponential and simple. We came back down after we broke above them, flipped them both for blue on the weekly, found support at the 200 simple, 8 and 21 angle to the upside, breaking out, taking out our cycle high right here, potentially, at least threatening it at the moment. Big, thick green candles. Momentum in our favor. Blue slope line. This looks so bullish to me. And yet somehow nobody, people don't use weekly charts. I understand that. They use the 1 minute chart or the 10-minute chart or the 1 hour chart or the 4 hour chart. So I get how no one in all of Earth, on all of planet Earth, I understand that there's no other person ever that has looked at a weekly DXY chart than me, than you guys, than us. I understand that. We're the only ones ever to use the weekly time frame. I get that. I understand that. Because everybody's looking at crackhead time frames or whatever. So that's a possibility. But every once in a while, somebody uses a weekly time frame. I've even seen, on occasion, very, very rarely, someone use a monthly time frame chart. But I've never seen anyone ever look at the DXY on the weekly or monthly. So we have confirmed a bullish trend on the daily. We have confirmed a bullish trend on the weekly. We're at resistance now, potentially getting ready to come up here and threaten our previous highs from 2017 and 2020. Let's look at the monthly. Let's look at the monthly chart. I've never seen anyone use this chart ever on the monthly. And yet here we are in a never-ending downtrend going back to 1980s. We had a peak in 1985 right here. We had a peak, or trough I should say, in 92 here. We had a peak in 2000 right here. So what was this? Okay, what was this time frame right here? This was Volcker, inflation, maximum interest rates, peak. This was dot-com bubble, burst, peak. So the fact that we had two peaks in a downtrend, we moved back on top of the 200 exponential and simple, and on the monthly, we confirmed a bull trend on the monthly for the first time in this 40-year chart right here. And now we're threatening these previous highs without even violating this trend, which we are potentially doing because we have crossed now into a bullish trend to the upside. Is it not believable? Is it not possible? Is it not realistic? All right, look, I'm going to show you guys something. This is a secret. I'm not going to explain it because I don't feel like it. Okay? But I'm going to turn on my drawing tools on the monthly chart for the first time, I think ever. All right? So no one has ever seen this before, including you guys. But I'm not going to explain it. I'm literally just doing it so I can show you one little portion of it. But I'm not going into depth on it right now because I just don't feel like it. Because it's just been a hell of a week, okay? But in the meantime, we have a resistance right here that goes from those two peaks. So where does that resistance come into line? it comes into line right here, roughly somewhere around 2024 and somewhere around 109. So is it possible that since we have now gone into a bull trend to the upside, that we could come up here and just put in another in a series of lower highs that has lasted for a period of roughly 40 years without even violating the trend? I'd say it's pretty likely that we do that. But is it also possible that we have actually flipped into a bull trend right here, and we're going to come back up here, and then we're going to potentially break out to the upside, and that the dollar is going to have that melt up that we've been potentially talking about? I mean, if the dollar gets up to 110, that's going to look like a melt up. It's going to be the world melting down because dollar denominated debt will be just basically crushing anyone that has it. You know, it'll be a short squeeze on the dollar, especially if we take out this level at like 102. But if we do get up to that level, is it possible that we actually break out and we see new all-time highs? Is it possible that we threaten the 121 range? Is it possible that we threaten, the 129 range? Put in a new all-time high on the dollar for the first time in existence since the 1980s? I mean, it's definitely a possibility. I think it's worth considering. You know, we have also time cycle analysis, the peak in 85. We have a, internal retracement peak in 93. We have a peak here in 2001. We have an internal retracement peak here in 2008, 2009. We have an internal retracement peak here in 2016. So projecting that out into the future, that tells us that there's a high likelihood that we would have an internal on the macro, external on the cycle peak in 2024 around roughly August. It's not going to be exactly August. Maybe it will be. I don't know. Do you know? I don't know. But roughly at about 110 on August of 2024, this tells us maybe the dollar is going to be here. Maybe it's going to be around that level. Do we know that for a fact? No. But, I mean, this looks pretty reliable to me. And then we can look at our macro, trough right here in blue in 92. Our macro trough right here in 2008. And we have a potential macro trough right here in 2023. So is it possible we actually come down here, put in a new low before then, and then we push to the upside? Is it possible we don't push to the upside? Is it possible we don't push to the downside? Sure, any of those things are possibilities. We only have 2 data points on the troughs right here. But it's worth at least paying attention to some of these various things. So, and again, I'm not going into like big detail on this stuff going on here. I'm not going to talk about the GAN fan and what this means. I'm not going to go into all the details on this thing. But if you just look at this for a second, and we see we have our low right here. We have our peak on the fan right here. So that's how you actually draw that. That's how you use this tool. I'm not going to go into the whole bunch of detail, but essentially this fan, this tool uses Fibonacci's or percentages like 25, 50, 75, etc., or the typical Fibonacci numbers 236, 382, 0.5, 618, 786, and then it takes into account time or cycles or time analysis, and then combines those multiple things together, and then we see here from our bottom, our beginning, to our top right here, we can see clear correspondence on these various levels. Here we are touching the 382 perfectly and stopping. Here we are touching the 50%, 50% range right here and stopping. Here we are touching the, what is that, the 786? Yeah, 786, perfect right here and stopping. Here we are moving back up to the top of the range right here. This is, then we come down to the 618, then we come up and we top out at the neutral line, which ends up being our macro top. Then we come down and find support at the 382. Then we come down to the 0.5. Then we see resistance at the 382. Then we come down exactly to the 618. Then we potentially come up here, get the measure move, and top out at the 0.5. And then after that, do we come back down again and we touch the 786? Do we find support here at a higher low and then move up to the upside? I mean, we don't know. We don't know for sure. But we do know for a fact that this isn't just random ass lines on a chart that just so happen to be the exact pivot points of the DXY on the macro over a, 13-year period, 14-year period. So is it luck? Are we just using colorful lines and drawings and stuff on a chart and we're just happening to get lucky and it looks like we know what we're doing? Yeah, maybe. But I trust it. Something about those lines doesn't just look lucky. All right, let's keep moving here. So, going to keep this to a minimum today. I didn't want to load up too many charts because honestly, I was afraid this thing was going to take a shit on me again and I was going to get pissed and not be able to do the stream. But we're here now, so maybe I'll take a couple requests at the end until we crash this fucker, till we burn it down. So XAU, okay, gold. Everybody again. Oh, gold is breaking out. This is it. This is the big one. Oh, we got the gold rally. New all-time highs. Last chance to buy. Better get your gold. Or it's just another lower high. Or it's just a retest of the same pink trend line that we have retested not once, not twice, not thrice, not 4, not 5, but a 6th time and got rejected exactly at that line again? Huh. Isn't that weird? So while everybody else is getting excited and premiums are going up and the metals markets are going nuts and the manipulation is done and the Reddit forums are going crazy and this is the big one. You're never going to be able to get gold again. The big crash is coming. The Fed can't hike rates. Fiat currency's going away. Fuck you, fiat. Or we just did the exact same thing again. The exact same thing that we've done for the last year. Again. So pardon my lack of excitement in the gold market. And don't get me wrong. I have a shitload of physical gold and silver. Okay? There's nothing more that I would love than for gold and silver to just break out to the upside and for silver to go to $500 and gold to go to $10,000. There is nothing more that I would love than that. Well, I could think of a couple things, but most of them involved very attractive women. But that being said, it's not like I hate gold and silver. I just am not biased to them. I'm a realist. So I'm not trying to be mean to anyone's investments or store of values or speculative assets. I'm just viewing it from a non-biased lens, the same way that I'm viewing the DXY from a non-biased lens or Bitcoin or whatever other asset we look at. I love bull markets. Bull markets are great. It's the easiest, fastest, most consistent way to make a shitload of money. I would much rather bull markets in every asset and we all just get our nuts every day and Shiba Inu goes to, $1 a SHIB and everybody's trillionaires. I would just love that. That's great. I don't give a shit. It's not like I'm mean and I hate Shiba Inus or I don't like little dogs. I mean, maybe I don't like little dogs, but it's not relevant. Maybe I don't like shit coins or SHIB coins or whatever, but it's not relevant. None of that matters. What matters is the technical analysis is telling us that we shouldn't be getting excited about gold right now. So while it is good that we have reclaimed the 200 exponential and simple, we have literally just done the same thing again. We are just still operating inside of this flag pattern, this wedge, this triangle, this neutral pattern with a bullish bias because it's coming off of a bullish move to the upside. So to me, is it surprising at all, even in the slightest bit, that we came exactly up to the resistance and then had a massive capitulation red candle to the downside, and it just so happened to correspond with the Fed meeting and them saying that they're not going to actually raise rates, but eventually they were, and they're going to taper their balance sheet, and they're going to let their, I mean, come on, guys. If the market ever has been spelling anything out for us, ever, this is the most predictable, the most technically, clear and concise market ever. I mean, Jay Powell is literally telling us exactly what he's going to do. The charts are literally telling us exactly what they're going to do. The S&P, the Dow Jones, the DXY, the interest rates, the gold chart, they're all saying exactly what they're going to do. Our job is to consistently make money in these markets. But our job before that is to protect our own principal. Make sure we don't lose our capital so that we can grow it over time. So our job is to trust the technicals and figure out what's going to happen in the market. And the whales, the market makers, the people in charge, the politicians, the 1%ers, whatever conspiracy theory it is, the manipulation, whatever it is, they are spelling it out for us clear as day what's going to happen. All we have to do is just listen. All we have to do is just, flip the little switch and turn off our bias and just listen. And you know what? Let's look at the long-term gold chart, because it's very important that we pay attention to this and keep this in mind. This is a big run-up right here. We're, record levels away from the 200 exponential and simple. We're chopping sideways, which is good. Consolidation after a strong move like that is good. But this is exactly what happened in 2011. We pushed massively to the upside. We chopped around sideways. We basically put in a triangle pattern that looked like, right up until we broke down from it, this looked like, potentially, it's a descending triangle. We broke out from a high, a lower high, a lower high, and then we come back up here, we retest, potentially take out that previous high, and then it's like, this is the breakout because we have a descending trend line. We broke out of the trend line. Gold's going to new all-time highs. Let's go. And then what happened? It rolls over, breaks down all the way below the 200 exponential and simple, and goes into what amounted from that peak right there in 2012, or the macro peak in 2011, went into a bear market that lasted till 2019, an 8-year bear market. So jumping in right here, getting excited a couple days or weeks or months in advance before a potential 8-year bear market and 60% downside potential risk is not a good idea, in my opinion. Now, can you just do whatever you want? Can you do what the market did today and just go all in on Bitcoin because you're bullish, or all in on stocks today because you're bullish, and just hope that you're right about Powell, even though Powell literally said what he was going to do and the market did exactly what it should do because he did exactly what he said he was going to do? So sure, you can flip a coin, you can bet whatever you want, but me personally, I like to look at the facts. I like to look at, what the market is telling us. So the market is telling us right now, hey, we better be careful with these metals because something looks a little fishy right here. And the last time this happened, we saw from peak to trough, from the high to the low, we saw a 45% drawdown that lasted for 1,561 days. So gold investors, silver investors, or whatever you want to call them, speculators, are salty right now because we've been going sideways for 546 days. So if we go 1,100 days and 50+% to the downside, how salty are they going to be in mid-2024 when gold is at $1,200? So let's just make sure that, we're using our brains and not getting caught up in the hype right here because of this. Because this right here. This is what got everybody excited. Another lower high. Sure. Silver looks terrible. I mean, this looks like the Russell, right? We come up here, we peak, we trade sideways forever. We can't break out to the upside. 200 exponential and simple have flipped over bearish. We're in a bear market on the daily in silver, still trading inside a range. Do I hate silver? No. Do I still own physical silver? Yes. Do I think that the silverback silver squeeze movement is a bunch of dumbass retards? Yes. All those things can be true at the same time. And we can still expect silver to go down regardless of what we want it to do. Is it likely that silver is going to be a teenager again soon? Yes, it's very likely. So somewhere around this range is our measured move. Somewhere around like $17.50 to $20 range. Wall premiums are at record highs. While people are paying $9 over spot for American Eagles when they are minted by Sunshine Mint, who you can buy, the same exact silver minted coin or, bar for $3 over spot. Okay, makes sense. Sure. Same exact silver, different stamp on it. Extra, 200% over premium on spot because it was minted by the United States. government instead of, you know, Sunshine Mint itself, who makes the rounds that are used to make the Eagles. Sure, makes sense. Definitely not FOMO. Definitely not silver FOMO. All right, let's look at some crypto, and then we're going to call it. We're going to keep it a little short today before we have technical difficulties. I don't want to get Tim pooled over here. So here's our Bitcoin chart. Obviously, we have broken down. We have this massive descending channel. We have broken down below the 200 exponential moving average. It has rolled over. We broke down from it, but we're able to reclaim it with this massive pushback up after our push down to 32,990. And then we push back up to the heart line of the channel where we got rejected today on that massive push up. And now we have a rejection to the downside, a rejection to the upside. So, you know, indecision, right back down in the middle of the range again. What's going to happen next? I don't know. Are we going to go to 30K? Maybe. Are we going to go to 40K? Maybe. I mean, I would say probably we're going to continue to trade inside of the descending channel because that's what we've been doing for months at this point in time. I would say that the expanded flat Elliott wave, you know, 5-wave correction, macro 4-year cycle play is laying out exactly perfectly like we've been discussing forever. So now all of a sudden you're seeing everybody, well, the 5-wave Elliott wave structure, expanded flat correction, Wyckoff distribution, double top, 4-year cycle. Listen to all these retards talking about the same thing we've been talking about. We've been ready for it. We've been prepared for it. We've been positioning for it. And now all these retards are saying it. The same people that were saying Bitcoin 100,000, Bitcoin $250,000, Moonboy, Lambo, Dogecoin, yeah. Fake technical analysts. One could argue that they're analysts, but they're not analysts. Let's be real here, okay? It's the problem with the internet is anybody can go on Twitter, look at somebody else's hard work or TradingView or whatever, or YouTube, look at somebody else's hard work, spend a couple minutes copying a chart, drawing a chart, giving them no credit, you know, regurgitating what they say, their actual analysis, and then sounding like they know what they're talking about. Okay, so be very careful who you're listening to because these retards are going to get you wrecked. I mean, look at these people were just saying they're all in on crypto at $70,000 on Bitcoin. They were saying a prominent YouTuber with some of the most views or subscribers was just saying that they were all in on Bitcoin at 46,000 and it just went to 34,000. I just bought 10 Bitcoin at 46,000. Why aren't they talking about their position now? I bought more Bitcoin on the way down. Sure, okay. So you bought 10 Bitcoin with no leverage at 46,000 and you still have the position. Okay, that's fine. Definitely a possibility. So you're down what, 10, 13, $15,000 per coin? So you just lost 100,000, 150,000, 200,000. Got liquidated maybe? I don't know. Do you know? Just saying, be careful who you listen to. Michael Saylor, pumping up his books, billions of dollars worth of Bitcoin. Okay, the dude started buying at, you know, what, back here, 10,000 or whatever, you know, running a marketing campaign for Bitcoin. Now what are we at? We're at 36,000. What's his average entry price on multiple billions of dollars in investments? And his average entry price now is his cost basis is essentially like right around $30,000 to $31,000. So the dude is up like, you know, 10 to 20% roughly on his Bitcoin position. So what's that going to look like if he goes down? What's it going to look like if Bitcoin goes down to 30,000? What's it going to look like if Bitcoin goes down to 20,000? What's his stock look like? Be real careful. Because remember, Kathy would look like a genius on the way up. And now she looks like, well, she still looks like a genius, but she looks like a genius that scammed a bunch of retards out of their money. You know, legally scammed them. So is Michael Saylor going to do the same thing? Did he do it already once in 2000 and almost go to jail for it? For SEC securities fraud? The answer to that question is yes, in case you don't know. So be real careful who you're listening to right now. This is, I mean, what was that? Oh, if you have a house and you don't have money for Bitcoin, take out a loan against your house. If you have a business and you can't sell your business because your family works there and you've had it in your family for your whole life, borrow against that business and buy Bitcoin. Sell everything you own and buy Bitcoin. Lever up and buy Bitcoin. Well, that was at like $65,000. So let's just hope that you weren't leveraged 2-to-1 because you just lost everything. You just got liquidated. What about all these geniuses that were using, staking platforms or, BlockFi or whatever to borrow against their Bitcoin? They borrow against their Bitcoin instead of selling it because they don't want to pay taxes on their capital gains, but they want to live off the money, and that's what rich people do. And they're like, oh, we're just doing what the rich people do. We don't ever sell our assets. We just borrow against them and then use that money to buy more of that asset as it goes up. And then we just keep borrowing against them, but we never pay taxes. Smart people don't do that. They do the opposite. They figure out a way to reset their cost basis on an asset so they can avoid taxes, but also continually raise the cost basis of that asset. So like if you bought Bitcoin at $20,000 and you could figure out a way to change the cost basis on that Bitcoin from $20,000 to $30,000 without getting into it technically and talking about taxes and all that stuff, it would be smart of you to do that. It would make a lot of sense. So if you're worried about paying taxes, which in most cases are, 20 to 40%, let's say, and then instead you eat an 85% drawdown, you're a dumbass. Arguably, if you're going to pay 20% capital gains tax and you take anything more than a 20% drawdown to avoid those taxes, you're a dumbass. So if you stake all your Bitcoin and then you lose it because you borrowed against that Bitcoin and then you bought more Bitcoin or some other shit coins or whatever, and then you lose your entire fortune and end up with nothing, one could argue you're a dumbass. And then on top of that, when your Bitcoin gets liquidated, you're going to have to pay taxes on it anyway. So if you bought that Bitcoin at $4,000 and bought the bottom of the last bear market or the breakout or whatever, and then it gets liquidated at, $40,000, you still have to pay taxes on, $36,000 in capital gains, even though your Bitcoin got liquidated, even though you don't have it anymore. So just be careful who you're listening to. There's too many dumbass people. Obviously it's not financial advice. I'm not your financial advisor, but I do actually care about the community and how many just dumbass people there are telling people to do dumbass things. Crypto looks terrible. It still looks absolutely terrible. Bitcoin looks horrendous right now. The only way Bitcoin could possibly look worse right now is if it breaks down below 30K. Ethereum looks like total trash. We were in an uptrend for so long. Oh, looks like we lost our drawing tools. We lost the charty chart. Anyway, there's a big trend to the upside here, and now it's no longer good. Broke down from it. We're below 200 exponential and simple. People are like, oh, Ethereum will never go below $1,000. You're dumb. Really? Because it was just $176. It was just $80. So we went into a bull market at $176, and now we're potentially about to flip into a bear market right here at, 3,500. So it's over 20x, and it can't go down. There's no way it'll go down. Lengthening cycles. My name is Benjamin Cohen, and I'm a genius. I don't believe in technical analysis in the traditional sense, but I will gladly talk about lengthening cycles, and I'll use my little tool to just say that, oh, yeah, this move right here, and then if we extrapolate that over here, Bitcoin to 1 million. Sure, okay. You're a dumbass. You're a dumbass. And now you're talking about Elliott wave theory? Now you're talking about, expanded flats? Now you are? That's weird. Copycat little bitch. It's absolutely terrible what's happening right now. And, I've watched this happen over and over again. Well, we're seeing it happen in the stock market. We're seeing it happen in the crypto market. We're seeing it happen over and over again. Just be careful, because you work hard for your money, and these dumbass people don't care about you. They don't care about your money. They don't care about you winning. All they care about is their views, their clicks, their club members, their whatever. However they're making money off you, they're making money off you, okay? I've had a bunch of people reach out to me recently talking about a specific content creator that has gotten them absolutely wrecked because they're consistently making calls, massively bullish calls, You know why these content creators make massively bullish calls? Because that's what people want to hear. So they get the views by telling you Bitcoin's going to 100,000 or a quarter million, or Tesla stock's going to 5,000 or whatever. They pump up whatever it is that you want to hear, and they give you that confirmation bias that you want, and then they get you absolutely wrecked. And they do not give a shit because they're getting paid based on views or based on, private group members or indicators or classes or whatever. I mean, look at Paperhand Paffrath. Okay? Dude was selling shirts and mugs and merch that say Diamond Hands and talking shit about anyone that sells. And then old Paperhands Paffrath sells his entire portfolio for $20 million and takes his portfolio was worth $50 million. And when he sold out, it was worth $20 million. So he lost $30 million in unrealized gains. And that's just what we know about. So the same dudes that were selling Diamond Hand merch are now paper handing their positions. Gotta be real careful in these markets. This looks to me like we are topping out on all these markets. Does it have to happen? No. Can we easily go back into an uptrend? Yes. Are we about done with this stream? Yes. All right, let's look at our Bitcoin dominance chart. What was the Bitcoin dominance chart telling us? It was telling us on the weekly that we had triple bullish divergence. The same way that all these other charts were telling us on the weekly that we had triple bearish divergence. So you have one drive to the downside, two drives that's lower, a third drive that's even lower than that. We're hitting support. We're breaking out to the upside and confirming triple bullish divergence. Breaking out, altcoins are getting wrecked. Bitcoin is going up in comparison to altcoins. And what did we say the most likely scenario for triple bullish divergence on Bitcoin is? Well, every time Bitcoin goes up, altcoins go up faster. So, therefore, Bitcoin dominance chart triple bullish divergence tells us the most likely scenario is that Bitcoin is going down and altcoins are going down much faster. And that's exactly what we're seeing. So this chart, once again, was laying out exactly what was going to happen ahead of time. All we had to do is just look at it without bias. And it tells us what's going to happen. And that's what this is all about. It's about just figuring it out for yourself. So you don't have to listen to one of these cunty little content creators or CNBC talking heads or dumbass people that are stealing other people's hard work off of whatever social media site and pretending like they know what they're talking about. This chart right here telling us that when we get up to that level at 45, if we break out to the upside, this is like capitulation of altcoins happening. Maybe we get back up here, we top back out, we run back down, altcoins pump, you get a relief rally, etc. But the trend is down. This is our 5 waves to the upside, and this is an expanded flat, perfectly played out. I might not have even showed this recently. Many of you may have never seen this before. This is exactly what an expanded flat looks like. Okay, we have a wave 1 to the upside. Wave 2 is a retracement of the wave 1. Then we have a wave 3 to the upside. Then the wave 4 is a retracement of the wave 3, and it can't come down and violate the wave 1. And then the wave 4 completes. We get a wave 5 to the upside. We get a series of 5 wave structure, Elliott wave to a new high right here. And then we start to go into a consolidation pattern, or, our A correction. And then the B, this is an expanded flat. We actually have the B go higher than the top of the 5. So even though this is a Bitcoin dominance chart and not a price action chart, this is the exact same pattern that we're seeing playing out in Bitcoin spot market right now. So the B goes higher than the wave 5. Everyone thinks is a confirmed breakout. And then we go much, 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 much lower. And then we see the A, B, C pattern retraces almost the entire 5-wave structure to the upside. And if we take a Fibonacci retracement from the top to the bottom, from the bottom to the top rather, we see that we came down almost exactly to the 886. So we had an 88.6% retracement of that move. I'm not going to go into crazy detail on the Bitcoin chart and go through this whole deal like we've done many a times, but you can easily go and look at that if you would like to, if you care to, if you want to put aside your bias and just pretend like I actually care and I know what I'm talking about and I'm not just being mean. But does this look like the exact same thing? Obviously it looks kind of crazy because this is a much longer time frame, but this is exactly what is happening right now. We have a 5-wave structure. 2 is a correction of the 1, the 3, the 4 is a correction of the 3, and then does not come down and violate the 1. The 5 is the high. We then begin to go into our correction pattern. We put in our A drawdown. Then we have the B comes back up, violates the top of the 5, puts in a new all-time high, and then begins to correct again. And then we see our C wave playing out. And then just by taking a simple Fibonacci, if we look at just from the wave 5 right here, just that alone, the retracement would take us back to potentially the 618, the 0.5, or the 382. That alone tells us we're going to either 20,000, 14,000, or 10,000 on Bitcoin. That's pretty scary. $10,000 Bitcoin, there's no way, you're dumb. But if what I'm talking about actually plays out and we see a similar situation to what we saw in the Bitcoin dominance chart, let's not even pretend like we're going to go 786 or the 886 or something like that. Let's say that that's absolutely an impossibility. Let's just say we have the absolute minimum 236 retracement for the 5-wave structure and the ABC expanded Elliott wave flat plays out. That gives us a Bitcoin of $6,200. The minimum retracement of a 5-wave structure is $6,200. The 382, which is the average retracement in a bullish market, is $1,385. And a lot of people are calling for $20,000 or less Bitcoin, but let's keep in mind that with our four-year cycles, we have never violated the previous all-time high in the retracement of a bear market that followed. So when we came up with a 1 and we had the 4 retracement, once we put in a new high with a 3, the 4 did not violate the top of the 1. And then same thing again, when we put in the 5 and we come back down, we do not want to violate the top of the 3, which is 20,000. So if we come down here to 20,000 and everyone says, no, it's okay, 20,000, 18,000, everything's good, that's a break of structure. And that is absolutely horrible because it's going to be a change in trend. But anyway, that's it. I'm not doing the whole in-depth thing. If you haven't watched that video, go watch that video. I talk about it in extreme detail and basically break everything down. But that's an example of, basically an expanded 5-wave correction or flat of a Elliott wave 5-wave structure rather. So that's our Bitcoin dominance chart. And now here's our total market cap chart. And you guys may remember that not too long ago, I was talking about a breakdown from $2.2 trillion. And what did I say? What's your favorite altcoin? What's your portfolio going to look like if we lose $600, billion in crypto market cap value? Well, look at your portfolio right now and you can tell me. But in all reality, realistically, we're probably headed down to 1.2 trillion or somewhere lower, realistically, probably around 1 trillion or $750 billion market cap if we go into a bear market right here. So, and then keep in mind on the weekly, we have bearish divergence, and we topped out here perfectly at the Fibonacci extension target of the 1.618 of the previous all-time high at $20,000. So, these markets look like shit. They look like shit. Some people are like, are you buying the dip? What are you buying? What are you adding to? What's in your portfolio, bro? It's a discount. If you loved it at 100, it's even better at 80. Just be careful. If God forbid we get any just average bear market, people are going to be fucked. Let alone if we actually get a real recession or go into like a Great Depression type scenario. And if you didn't watch that video that I did from a stream, I snip it to like a 2-hour clip where I explain like the macro of everything going on. And I titled it something like the most important video that you should ever watch or something along those lines. Highly recommend you check that out. Highly recommend you check that out because we're seeing for the first time in 40 years inflation. Okay. Jay Powell is getting the first BJ in 40 years right now. 40-year BJ, okay? You get one every 40 years. So let's look at what happened the last time he got his nut. Well, not him specifically, but, Paul Volcker did. So, but yeah, that's it for today. That's all we're doing. We're done. We made it to the end. Yeah, we did it. Yay, hooray. I don't mean to be all gloom and doom, but let's be real here, okay? It's not like we didn't see this coming. It's not like the market didn't spell it out. It's not like Jay Powell didn't tell us exactly what was going to happen. And for those of you that are not in the group that would like to be in the group, you can hit me up, obviously, and all that good stuff. But, I will just read a little excerpt from I'm going to read a little excerpt from what I said about what would happen today in the Fed meeting, because it literally played out exactly like we said. Maybe not. I didn't realize how much we talk in the group. God. All right, this is what I said this morning at 8:46 a.m. All major indexes are below their 200 daily moving averages. So are 99% of cryptos. So the market is bearish, preparing to enter a bear market and long downtrend. So in order to save the trend, the expectations of the market need to be so much worse than reality that the money piles back into risk-on assets. We have lost momentum. We will get rate hikes. There is nothing Powell can say that will save the trend, nor do I think he wants to, in my opinion. If he just comes out and says the same thing, which he will, because he is a little bitch, the market will try to rally, and it will fail, in my opinion. People will initially think that's good. Only 25 basis point hike in March and continuing to taper. It's going to monitor the data. That's great. Then reality sets in. The market makers will see there is nothing that will cause the momentum to shift back bullish. Easy money is done. Risk is too high, and the reward is all but non-existent. Then we go lower, until we break the back of inflation or Powell caves like the little bitch that he is. Or I'm completely wrong, and all of a sudden we just start shooting up to new highs, which sounds more realistic, ? We have been at zero rates for 2 years. We are at full employment. Governments around the world have pumped trillions of dollars into the economy. We have had record-setting fiscal and monetary conditions for years. What could possibly happen at today's meeting that could be better than all that? I can't think of anything. Not one thing he can say that is bullish. Even if he said we are going to continue asset purchases, keep rates at zero, and not reduce the balance sheet, is that enough to create momentum like we built up over the last 2 years? I don't think so. So yeah, that's enough. That was, essentially. But obviously we saw that play out perfectly. Powell is still a little bitch. He did absolutely nothing. He's just sitting back enjoying the filet. And there's nothing wrong with that. He deserves it. He waited, 20 plus years for their inflation that they finally got. And everybody's like, oh, it's because all the fiscal policy. It's because all the money. It's because they printed. It's because all this. Really? It's because they printed all this money. So they printed a bunch of money forever and never got inflation before. And then all of a sudden they print a bunch of money this time. And also the supply chain breaks down and now they got inflation. So they printed money in the past, never got inflation. They printed money this time and they got inflation, but also the supply chain broke down. So is the X factor here the printing of the money, or is it the supply chain breaking down? Because one would argue that every other time they printed money, they never got inflation. But this time the supply chain broke down and now they're getting inflation. So is the actual issue the supply chain, or is it the printing of the money? Because I would say the printing of the money definitely didn't help, but I would say it's the actual supply chain. And that's what we need to pay attention to. What's the actual cause of all this? But yeah, that's it. I'm going to jump in the chat real quick here, engage with our bots here real quick, and then we can call it there. What's up, bot? What are you doing, man? Oh, scamming people, no doubt. Nice. Oh, more bots. Sweet. This one's named after a girl. Cool. What's up, bot? Hey, get out of here. So yeah, that's it. Videos every week. Thank you for your hard work. You saved my ass. Of course, my friend. That's what I'm here for. America's Finest says, cool channel, Crypto Trend Trader. Hey, thanks, bro. Sorry you caught me a little ranty today, but it just pisses me off because I know people are just getting absolutely wrecked listening to the bullshit, fake-ass content creator, talking heads / whatevers. Everybody looks like a genius in the bull market, and then as soon as we flip into a bear market, all of a sudden, the emperor has no clothes. And that's exactly what's happening right now. The ocean, the wave came in, and it's coming back out, And, in the words of Warren Buffett, we're about to see who doesn't have, any swim trunks on. So, but yeah, that's it for today. Hopefully you guys enjoyed the stream. I appreciate each and every one of you. If you're interested in joining the group, you can reach out to me, blah, 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 blah. You get the free indicators with a one-time contribution, help support my work. We do streams every week on Wednesdays and Sundays, God/technology, allowing us to. Yeah, that's it. Normally we'll dive a little more into the stock market and all that stuff, but there's really no reason to look at all the individual sectors, all these individual stocks. There's just no reason to do it right now. I mean, same with all the cryptos, all the shit coins, whatever. There's really no reason to do it. All we need to do is look at the most important ones, the market makers, the movers, the staples. And then from there, we can tell what every other chart's going to look like. If Bitcoin looks like shit, every other crypto is going to look like shit on the longer time frames. Could we have a little pop on X random shitcoin? Sure. Could we have a little pop on X random shit stock? Sure. But overall, right now, we are potentially at a reversal point. The most important times ever in trading and investing are inflection points. The points where you either switch from bullish to bearish, switch from bearish to bullish, or confirm that the trend will continue. And right now, we are at an inflection point. And it looks like we are flipping from bullish to bearish. So right now is the number one most important time to protect your ass. Because this is where everyone loses all their money. They buy the dip, buy the dip, buy the dip, run out of money. And then stuff starts selling off. And they're leveraged. And then they lose everything they ever gained. And then more. And then they end up with nothing. And if you don't think for 1 minute that the elites, that the ruling class, the politicians, the 1%, the 0.1%, if you don't think they are pissed off right now at all the little plebs, all the little slave class people that won't go back to work because they made $1 million or whatever on crypto or on Tesla or on, whatever it is that they speculated on, or they're afraid of this pandemic, or they can't find childcare, or they're, just enjoying their, unemployment or welfare or whatever. If you don't think for 1 minute that these rich ruling class people are getting pissed that they can't get the goods and the services, they can't get, whatever it is that they need, a flight or an Uber or, a waiter or waitress or, whatever it is that they're after, that they can't get. They can't get the prostitutes they want because they're all on OnlyFans now. They can't get the whatever service or good that they want that they're not able to get right now, and it's inconveniencing them. If you don't think they will gladly crash the world economy and the markets to make things go back to how they were before, if you don't think they will gladly give up a portion of their wealth or already got out of the markets anticipating this crash because they're all behind closed doors discussing it, planning it, central planning it, one could argue. If you don't think that, you need to dig a little deeper. Because in my opinion, I think that these people have gained a ton of control. They got people to give up their rights, give up their freedoms. They got super rich. And now they're like, you know what? That's enough for now. Let's let things go back. Reversion to the mean. Prices crash, markets crash, economies crash. And then we'll just gain a little power next time. We'll make the people a little more reliant on us. We'll make them give up a little more of their freedoms. It doesn't just happen all at once. The dollar doesn't just go to zero all at once. The economy doesn't just completely crash all at once. The system doesn't just break down all at once. We don't just give up all our rights, all our freedoms all at once. There will be another scariant. There will be another market bubble. There will be another recession or another whatever it is, black swan event. There will always be another one. This isn't just it. The likelihood, if we look back at history, at the amount of times when people said, this is it, this is the end of the world, this is the end of the human race, how many times did they say that it was going to happen? The fall of Rome, the World War I, World War II, all these different events that happened over time. 9/11, oh, the terror, things will never be the same. Oh, Afghanistan, oh, this. It's just one thing after the other. It always feels like the end. Like this is it. This is the big one. It always feels like that when it's happening. But how often is it actually? Almost never. So that being said, just protect your ass. Don't buy into all this bullshit, okay? Don't lose all your money because you're listening to some dumb fuck on the internet who doesn't give a shit about you, who's getting, making money off of you through either affiliate links or views or selling you courses or something else, or, CNBC or whatever said other person that you're listening to. Take the time, learn, educate yourself, invest in yourself. The one investment that you should always be confident to make is investing in your own education, because no one can ever take it away from you. You will always have it into the future. So even if you're 50 years old and you're not going to retire until you're 70, you have 20 years to use that education to further your life and further your quality of life for yourself and your family. If you're 20 years old and you have 50 years that you can use it, what is a small investment in yourself or anything in between? So it cracks me up how people will spend money on the dumbest shit, but they won't spend money on their education. And I'm not talking about some bullshit college education that you don't necessarily need. Okay. I'm talking about, spend the time, spend the effort, spend a couple bucks on yourself, get better, learn how to do stuff, learn how to think for yourself, think outside the box, educate yourself, learn technical analysis, learn important things, put in the work now, and you will reap rewards for the rest of your existence on this earth. Whether you're trading cryptocurrency, whether you're investing in stocks, whether you're, collecting Beanie Babies, whatever it is, just invest in yourself. Stop wasting your money on these scam ass people, and definitely don't lose it because somebody else told you that you should have diamond hands. And then paper hands Pathrath liquidates everything because he gets scared like a little bitch. And then buys back in after the pump, and then it dumps again. Real estate guy, not a stock market guy. Got famous from real estate and talking about stimmy checks. And then got famous making money off of people investing in the stock market during the biggest bull market bubble of all time. And then jumped on the crypto bandwagon. Knows nothing about the markets. He knows nothing about the markets. Only what he's learned in the last year or two. Other people have been in these markets for 20 years, 30 years, 50 years. So do you trust Warren Buffett? No, he's an old boomer. He's dumb. I trust Paper Hands Pathrath because he's got 1.7 million subscribers. Good luck with that one. All right, but that's it for today. Hope you guys enjoyed the stream today, the rants, all that good stuff. Appreciate each and every one of you. I will catch you guys on the flip side. It is Wednesday, January 26, 2022 at 10:49 p.m. Eastern Standard Time. Make sure you tune in on Sunday, 8 p.m. Eastern Standard Time for our next live stream. Take a look at the markets. Dive in deep. We'll get so deep in these markets. We'll be deeper in these markets than Jay Powell is inside the throat of inflation. But that being said, that's it for today. Crypto Trend Trader, and I'm out of here.